What's going on? Alex here, and today I'm answering your tax questions from YouTube. Let's take a look. This person is asking about a previous video I made regarding charitable contributions. And the main idea there was an individual was looking to contribute over $50,000 worth of similar items to charity in a particular tax year. Now, the issue there is that given that it's such a substantial amount being donated, the tax code is written in such a way that generally you're required to include an appraisal for those goods that you're donating to substantiate the deduction that you may get on your tax returns. Let's delve into a little bit more of what I'm talking about there, and then we'll handle this question and wrap this all up for you guys so it's easy to understand. So what we're talking about is Schedule A, and this has to do with itemized deductions, and this is where you would deduct various things like medical expenses over certain thresholds, taxes, mortgage interest, things like that. And if you scroll down here, you'll see that there's a section for gifts to charity, which can create a deduction for you if you itemize. So if your total itemized deductions exceed your standard deduction, including those charitable contributions, then you generally would receive a tax benefit from that. So there is a goal here for some people to maximize their tax efficiency by making charitable contributions, and this is where that would happen. So if we read here, we see that if you make a gift of over $500 in a particular tax year, you must attach Form 8283. Let's take a look at that. Now, 8283 deals with non-cash charitable contributions. Now, if you're giving cash contributions, the amount of the contribution is easily determinable, right? So if you're giving $50,000 in cash, it's worth $50,000 in most cases. Now, when you're dealing with non-cash contributions, in that case, the value can be a variable, right? So you'd have to get an appraiser to tell you what it's actually worth, because I'm sure plenty of people out there would like to create a doodle on a piece of paper, claim that it's worth $50 million, donate it to charity, and take a tax deduction. That's not going to work, all right? So this form specifically deals with non-cash charitable contributions. And you'll see here in Section A that it deals specifically with donated property of $5,000 or less. And it says that if you contribute assets worth less than the $5,000 threshold, then essentially you can use this part of the form, Section A. On the contrary, if you scroll down to the second page, you'll see there's a Section B, and this is for donated property over $5,000. All right, there are some exceptions here, but generally, if it's below $5,000, you can account for it on that first page. If it's above $5,000, now you're dealing with this section. Now, one of the downsides is right here. And it says a qualified appraisal is generally required for items reportable in Section B. So taxpayers don't generally want to use Section B because that means they need to go through the hassle of getting an appraisal and sometimes finding out that something they think is worth $100,000 may be worth closer to zero, or $10,000 or $1,000, whatever happens to be. So in this case, if you're looking to make charitable contributions over $5,000, in many cases, you need to include an appraisal. And that is what this question is centered around that I received here. Now, in my original video, the individual was looking to contribute more than $50,000 in a particular tax year in non-cash goods. Okay, this was clothing in this case. And I mentioned in the video that you need to get a qualified appraisal and include it with the return if you want to take the deduction for the donation of those clothing items because it's over that $5,000 threshold. And this person here, Uxie, asks the following. What if he was to split the donation up into chunks valued at less than $5,000 each, perhaps made monthly for 10 months? Wouldn't that then make the same result, $50,000 total contribution, but keep it at the top of Form 8283? I appreciate the question. I appreciate the ingenuity and the creative thinking. Unfortunately, that's not going to work. So let's take a look at the instructions to Form 8283, and that'll give us a bit of an idea as to why spreading the donations out over multiple months isn't going to get us around the requirement to get a qualified appraisal if the total value exceeds $5,000 in that particular tax year. So if we look at the first page, we see that Section A is used to report donations of property for which you claim the deduction of $5,000 or less per item or group of similar items. Okay, that's key. Now, it says use Section B to report donations of property for which you claim the deduction of more than $5,000 per item or group of similar items. Now, in figuring whether your donation for a group of items was worth more than $5,000, consider all items in the group, even if items in the group are donated to more than one donee organization or the organization receiving the gift. So essentially, they are keeping in mind that people might donate similar goods and that each one individually may not exceed that $5,000 threshold, but the value of the group may exceed that threshold. So in that case, you still have to get an appraisal, and it's not going to allow you to space those contributions out to stay below the threshold. That's not going to be proper tax reporting. There's even an example here. You claimed a deduction of $2,000 for books you gave to college A, $2,500 for books you gave to college B, and $900 of books you gave to college C. You must report these donations in Section B because the total donation was more than $5,000. Now, whether or not you need to file one Form 8283 or multiple, then that's a different question. But the point is that you're not going to get around the requirement to get an appraisal for a group of similar goods donated to one or more donees in a particular year by spacing out the distributions and trying to allocate the values differently than what is the situation in reality, okay? So the tax code is structured in that there is the allowance for deduction for charitable contributions, but certainly Congress and the IRS don't want taxpayers abusing these provisions and skirting the rules to obtain appraisals over certain thresholds. So, Uxie, thank you so much for your question. Appreciate it. If you have questions about what we're talking about or other tax questions, feel free to drop them in the comments below. And just like I did today, I'll make a video to answer them and clarify all this tax craziness for you. So, hopefully this was helpful. If you like this video, feel free to leave a comment below, subscribe, and overall, bring your good vibes to us and we'll give them right back to you. With that said, thanks for watching, and hopefully this was helpful.